Hey everyone, my name's Andy. My channel's Finding Value. If you like making a bunch of money, this is the channel for you. Subscribe to the channel. Give me a thumbs up. Leave comments below. On this presentation, there was a comment made that I'm addressing a comment that was made that said, hey, look, I'm younger. I want to grow my wealth. I don't want to be in precious metals. Precious metals is more about preserving your wealth than growing your wealth. And I'm going to disagree with that. I could have made a lot more money piling even more money into my physical precious metals holdings and swapping these metals. Whenever those ratios are extremely cheap, you can get very good returns. You can get 10x on your money. And I want to show you an example here. When I was buying, and I should have bought even more, and I didn't know the ratios as well back then because I was a very young investor. I was still figuring this stuff out. So I'm going to go through this example. I call this presentation The Power of Knowledge. And I'm going to show you why you could have made a bunch of money and grown your wealth using physical precious metals and how powerful that is using physical precious metals. So it says, I want to grow my wealth. I don't want to preserve it. I want to grow it. Young people say that they want to grow purchasing power and need to take on a lot of risk. Here's something I wish I had done and known when I was in my mid 20s here. I wish I knew the ratios better. I wish I knew them inside and out. And I knew them a little bit. I just didn't know, and I didn't use them as much as I should have. And I'm going to say anomalies are your friend. So if you see anomalies in history where you see extreme cheap ratios, you got to jump on it. You got to jump on it. And you got to have the power to hold it. So I'm going to go through a physical metals example here. So this is a gold to palladium ratio. And in 2009, it was above 4. Anything above 4 is an absolute steal for palladium. And if you look at some of these other charts like platinum to palladium in 2009, it was also over 5, which means 1 ounce of platinum could buy over 5 ounces of palladium. That's an extreme anomaly. Whenever you have these anomalies in history, here's one in the 80s, you just buy them. This isn't financial advice. This is financial education. I'm just saying when you identify anomalies in history, when the ratios are this cheap, and some of the mining companies you might not want to go into because they can go bankrupt at bottoms. If they sell a bunch of palladium and palladium's the cheapest it's ever been, they could come under pressure. Now, the physical metal, you can buy that without any worries. You just go in and buy it. And here's the palladium to silver price. And down here, I'm focusing on in 2009, we were at only 10 ounces or something, or even less. That is an extreme anomaly in history, where palladium is this cheap against everything. And I bought it in, I think it was the mid-2000s, a little bit before this, and it was also cheap. But that right there in 2009 is a ridiculous price for palladium. So the palladium price in 2009, palladium price bottom in 2009 at ridiculously low prices. The ratio should guide our behavior, these ratios. A low-risk way to make obscene amounts of money swapping physical precious metals is a way that I think most people should look at making money. You don't have currency risk. You don't worry about inflation or deflation. All you worry about is swapping the metals at certain ratios. And when you see these large, extreme valuations to one side or the other, take advantage of it, is my opinion. Here's the price of palladium. And then during that time, I highlighted it, and it was at the end of 2008, it was $178. $178 is ridiculously cheap. And if you were to chart this thing out, and I've got it charted out here, it was at the bottom of its channel. This right here, if I saw this, I would dump so much money into it. Not because it's 20/20 vision, but it's because I know when the ratio is cheap and you're at this very low valuation and you're at a point where you've got some support. I mean, it's like this is the perfect alignment that I've ever seen. So these market crashes provide such great opportunities to generate wealth for individuals, because that was a market crash, that people, myself, everyone should take advantage of it. And here's the palladium performance, just to show you. 100 ounces of palladium during that time frame. And if it's $178 an ounce, it takes $17,800 in total, which is that's not that much money. It's a lot, but it's not horrible. You swapped palladium to platinum earlier this year when I swapped it. you would have 333 ounces of platinum today from the original 100 ounces of palladium buy from 17,800. You took $17,800 in 2008, and you'd have 333 ounces of platinum today. In dollar terms, that's $433,000 in total today, with an investment in the most undervalued metal of platinum. And I'm going to show you what platinum looks like, but that is insane to have that amount of ounces of platinum for $17,800 of an original cost. And here's the platinum to palladium ratio. This is where I would have swapped it, and this is where I did swap my metals. It was right in April, and it was under 0.5. I think it was almost 3 ounces of platinum to 1 ounce of palladium. That is a ridiculous anomaly in history, and I was buying platinum like hell. So is platinum the next? Platinum's the next metal, in my opinion, that is cheap compared to all other metals in terms of ratio analysis. Great market balances going forward in terms of supply and demand deficits. It has great price charts. It's a renewable metal for fuel cells. And what else is needed to paint this picture? I mean, I'm going to show you a bunch of charts. But platinum, I think, is the next metal that's going to be a price performance of palladium. This is why I think it. This is the price of platinum. It was coming in this downtrend. We had this large spike down all the way to $600. $600 is incredibly cheap. It was also $600 was a high way back in the day, I think in the 90s, where it peaked out at around 600. It was 80s or 90s. And this was back testing and touching the top, and then it took off. So I think this looks fantastic. It broke this very large weekly, over a decade-long chart pattern. It broke its downtrend to the upside, so this is looking fantastic. I mean, this definitely has my attention. Here's the platinum to gold ratio. The ratio broke to the upside here on the platinum to gold, so that looks good. And this is the platinum to silver ratio, and we're still down here at 44.8, which is extremely cheap. I mean, platinum can only buy 45 ounces of silver. I mean, that's so cheap. And in history, it's gotten over 130, I think. So, I mean, this has a lot of this could go far higher, platinum that is, to the upside in terms of prices and in terms of its ability and purchasing power against the other metals. So I think platinum, even though this scenario, I showed palladium when it was extremely cheap against all the other metals in 2009, I think we're right there or just after that point in platinum. So platinum is still a screaming buy against all the metals. It's a screaming buy against rhodium, palladium, gold, and silver. Whenever you have that alignment and the ratios are telling you that it's cheap, I get in there and I get aggressive and I buy the heck out of it. So that's what I do. You guys can use this information for whatever you want. I just wanted to show you that in the comment section, precious metals do preserve your wealth, but you can also, absolutely kill it. And in this scenario, from 2009, you turned a little over $17,000 into $433,000. I don't know how many investments you guys have that have done that. There's probably some, but in order to beat this super low risk approach, you're going to have to take a bunch more risk. So I would have been better off dumping more money into this approach than what I did originally. I would have been far better off because I could have what if I put 100 grand in there? I mean, that's going to move, and the risk is so low that I would be putting hundreds of thousands of dollars into these things. That's what I would do. And that's what I've done with platinum, silver, and all my other holdings. So I think this way, super low risk. If you know the ratios, you know what's cheap, you look out and see the demand for these metals. If there's deficits out in the future, I think it's a pretty compelling area to really look into if you're interested in investing in physical precious metals. I think it has plenty of leverage for returns than anything else I've seen in terms of leverage and risk. If you guys like this content, subscribe to the channel, give me a thumbs up, leave comments below. Thank you for listening. This is Finding Value.